$47 billion in Q1 Pharma deals alone. Merck, Eli Lilly, Biogen just throwing cash around like it's 2021 again.
Oh, come on. It's not a frenzy, it's a panic. They're staring down patent cliffs. Merck dropping $6.7 billion on turns. I read the footnotes on those clinical trials.
Spoken like someone who hates a massive banker fee. Let them panic. The rumor mill says AbbVie is next.
If they're buying, we're analyzing. Let's see who's actually getting their money's worth. The rundown.
86%. That is the new high watermark for private equity confidence according to the latest industry surveys.
Which just proves my theory that PE guys only have two emotional states: total existential dread or absolute euphoria. There is no middle ground.
Hey, stabilizing interest rates and literal mountains of dry powder will do that to a person. Plus, we finally have that landmark Supreme Court ruling limiting unilateral tariffs. Cross-border deals are officially back on the menu.
Unless you are in the Asia-Pacific region. Buyers there are completely sitting out this Q1 frenzy while North America and Europe run up the scoreboard.
Speaking of running up the scoreboard, Molson Coors just bought Atomic Brands. You know, the makers of Monaco cocktails.
Ah, yes, the Beyond Beer portfolio, because nothing says strategic corporate growth like canned vodka energy drinks.
Do not mock the canned cocktail. It is a margin machine. You get tired of pitching software roll-ups. You buy a ready-to-drink liquor brand. It is the banker circle of life.
I will stick to actual hardware. Here is a weird one. Sensofusion, the Finnish defense tech firm, just acquired Atoll Aviation.
Wait, really? An aircraft manufacturer?
Exactly. They are bringing manufacturing in-house to ramp up counter-drone systems, which fits right into this insane stat I pulled this morning. 40% of all Q1 deals involve an AI or advanced tech component. Traditional industrials are absolutely scrambling to buy tech capability right now.
Tech is hot, sure, but look at banking. Home BankShares just finalized their acquisition of Mountain Commerce Bancorp. All-stock deal. Banking consolidation is hitting a 7-year high.
Oh, come on. I have to push back on that narrative. It is a $146 million deal. That is practically a rounding error. You cannot claim a massive consolidation wave based on a microcap regional merger.
It is not about the deal size, Maya. It is the velocity. The regulatory approval processes are quietly getting expedited. Watch what happens this week. We are going to see a ton of these mid-sized bank deals cross the finish line.
Fair enough. Velocity is definitely up across the board. Goldman Sachs officially closed on Innovator Capital Management, and Court Square just grabbed a majority stake in Cool Tower.
It is a total frenzy, but all of this, the regional banks, the canned cocktails, the defense drones, it is all just the opening act for what is happening over in healthcare.
$47 billion in Q1 alone.
Merck, Eli Lilly, Biogen are just dropping massive checks. And the rumor mill says Amgen, AbbVie, and Novartis are loading up for the next mega deal.
We need to talk about this pharma boom, because I read the Centessa footnotes, and the multiples they are paying for these clinical stage pipelines are completely unhinged. The big one. $47 billion in one quarter. I had to refresh the terminal 3 times to make sure I wasn't looking at an annualized chart.
It's a feeding frenzy out there. Q1 is officially the quarter of the biotech buyout. We're looking at Merck dropping $6.7 billion for Terns Pharmaceuticals, Eli Lilly grabbing Centessa for $6.3, and Biogen taking out Apellis for $5.6.
And all of those closed within weeks of each other. It feels like panic buying to me. I read the Centessa proxies last night. Lilly is paying a massive premium for clinical stage assets that are still years away from commercial revenue.
Oh, come on, it's not panic buying. It's a necessary pipeline restock. These pharma giants are staring down the barrel of patent cliffs. They have mountains of cash. They're just doing what they always do, buy the innovation because you can't build it in-house fast enough.
Sure, but look at the multiples. You can't just throw $6 billion at a phase 2 trial and call it synergy. They're shopping on an empty stomach right now.
Hey, shopping on an empty stomach gets you the good snacks. I used to see this all the time in the bullpen. One mega deal hits the wire, and suddenly every corporate development team gets a call from their CEO asking why they aren't buying something.
The FOMO is definitely real, and the private equity guys are just sitting back laughing. PE confidence is at 86% right now. It's an all-time high.
They have so much dry powder, Maya. And with interest rates finally stabilizing, the math on these buyouts actually works again. Plus, did you see the ripple effect from that Supreme Court ruling?
The unilateral tariff limits. Yeah, that completely changes the risk model for cross-border deals. Suddenly, you don't have to model in a surprise 20% tax just because someone in Washington woke up cranky.
Exactly, which is why the European and North American pipelines are completely jammed. But the whispers I'm hearing out of the Asia Pacific region are completely different. Buyers over there are totally paralyzed. They're lagging way behind.
Well, they're missing out on the biotech sweepstakes. The rumor mill is absolutely convinced Amgen and AbbVie are going to announce something by Friday.
Don't count out Bristol Myers Squibb. I heard their M&A team hasn't slept since Tuesday.
I believe it. But what really fascinates me isn't even the pharma boom. It's the footnotes in all these other deals. Analysts are saying 40% of all Q1 deals involve some kind of AI component.
40%, that's insane.
It gets weirder. We have traditional manufacturing and defense firms scrambling for AI capabilities. Voices?
I am looking at this new industry survey saying private equity confidence just hit an all-time high of 86%. 86. They are practically doing cartwheels down Wall Street right now.
Oh, please. 86% of PE guys are confident? That is just guys in fleece vests telling other guys in fleece vests that they are geniuses.
Hey, I used to wear those vests. They are incredibly practical. But look at the macro picture. Interest rates are finally stabilizing. They are sitting on massive reserves of dry powder. They have to deploy it or lose their fees. Maya?
Fine, they have cash. But look at what they are actually buying. Analysts are out here claiming approximately 40% of all Q1 deals involve an quote-unquote AI-enabling component. 40%.
Right, because traditional industrial and manufacturing firms are terrified. They are scrambling to acquire AI capabilities just to keep up.
Nate, I read the deal structures on some of these. Buying a supply chain company that uses a chatbot for customer service does not make it an AI deal. It is just bankers slapping lipstick on a pig to justify a 20 times multiple.
Okay, wow. Cynical Maya is out in full force today.
I prefer data-driven.
I will concede there is some AI washing happening, but you cannot ignore the cross-border momentum. Market observers are pointing to that landmark Supreme Court ruling limiting unilateral tariffs.
Yeah, that is actually a massive catalyst.
It really is. It is re-globalizing deal-making overnight. Even with buyers in the Asia-Pacific region lagging way behind right now, North America and Europe are making up for it. It is like someone finally took the parking brake off cross-border M&A.
It definitely changes the risk calculus for the mega deals. But speaking of taking the parking brake off, regulators are suddenly waving through mid-sized regional bank mergers.
Oh, the expedited approval processes.
Exactly. We need to talk about what home bank shares just pulled off because this entire sector is moving fast. Spill the tea. So you have Merck, Eli Lilly, and Biogen throwing around over $18 billion. The analyst group chats are losing their minds over who drops the next mega deal.
My money is heavily on AbbVie or Bristol Myers. You do not sit on the sidelines when $47 billion changes hands in your sector in a single quarter. It is pure banker FOMO.
Corporate FOMO is a real valuation metric now, but look at Novartis. They have the balance sheet for it, but they are playing it so cautiously. Meanwhile, the Asia-Pacific buyers are completely asleep at the wheel right now.
They are totally lagging Europe and North America, but honestly, I am way more interested in the beverage gossip today.
Oh, you mean the Molson Coors deal?
Yes, buying Atomic Brands, the people who make Monaco cocktails. I almost dropped my coffee when I saw the press release.
They are calling it an expansion of their quote-unquote Beyond Beer portfolio.
Beyond beer. Just call it what it is, Maya. It is canned liquor for tailgates. I survived my first 2 years in banking on Monaco cocktails and false hope.
That explains so much about your early career financial modeling.
Hey, my models were pristine. But seriously, Molson Coors is buying growth because traditional beer is flat, just like every industrial firm right now suddenly claiming they are an AI company.
Wait, 40% of Q1 deals had an AI component. That is not just a fake narrative. That is traditional manufacturing realizing they are obsolete if they do not buy the tech.
It is a buzzword premium. Half these acquired companies are just wrapping a language model in a custom user interface and selling for a 10x multiple.
You are way too cynical on this. I read the footnotes on the sensor fusion deal. They bought Atoll Aviation to build counter-drone systems. That is real hardware, real tech integration, not just a software wrapper.
Fine, counter drones get a pass, but I am keeping my cynical hat firmly on. Speaking of old school industries trying to look modern, we need to talk about what is happening with regional banks tomorrow.
Expedited regulatory approvals are basically acting like a starter pistol for mid-sized bank mergers this week. Tomorrow's radar. I'm hitting refresh on the SEC portal right now because tomorrow morning is going to be a bloodbath of manufacturing firms pretending they're AI companies.
The FOMO is real. Everyone wants to be part of that 40% statistic. But honestly, Maya, ignore the tech filings. Tomorrow is all about regional banks. Expedited regulatory approvals are finally unjamming the pipeline.
Really? You're prioritizing regional banks over the AI rush? The home bank shares deal was what? 146 million? That's pocket change compared to the 47 billion we just saw in Pharma.
Hey, 146 million all-stock deal is the appetizer. It's a signal. Though if you want the main course, my phone hasn't stopped buzzing about AbbVie and Novartis.
The biotech rumor mill is definitely sweating. After Merck dropped 6.7 billion on turns, the rest of the sector is terrified of being left behind.
Exactly. The big pharma bankers aren't sleeping tonight, which means neither are we.
Speak for yourself. I'm setting a price alert for the APAC markets and going to bed.